Hello friends, and welcome back to the channel. Today, we're diving deep into a topic that gets everyone excited, the hunt for the next big multi-bagger stocks. We're looking beyond the immediate horizon, towards 2026 and beyond, to identify companies that have the potential for explosive growth. In today's video, I'm going to walk you through 5 incredibly high-potential, fast-growing Indian stocks that are making serious waves in their respective industries. These aren't just random picks. These are companies that are showing all the right signs. These are businesses that have established themselves as leaders, demonstrating phenomenal revenue growth, a relentless drive for innovation, and most importantly, robust and growing order books that give us a glimpse into their future success. We're talking about companies at the forefront of India's growth story. From renewable energy and artificial intelligence to defense electronics and aerospace engineering. Each one has a unique story and a compelling reason why it could be a significant wealth creator in the coming years. Now, before we begin this exciting journey, a very important disclaimer. This is not investment advice. Please do your own research and consult with a financial advisor before making any investment decisions. My goal here is purely educational. This is simply a look at some of the most exciting companies on the Indian stock market right now, based on their fundamentals and growth trajectory. So, grab your notebooks and let's get started. The first company on our list, friends, is a name that resonates with India's massive push towards renewable energy. I'm talking about Insolation Energy. Now, for those of you who haven't heard of them, this isn't just another solar company. Based out of Jaipur, they are a major force in the manufacturing of high-efficiency solar panels and modules. Think about the scale of India's green energy ambitions. Insolation Energy is right at the heart of this revolution. They have established themselves as the second largest manufacturer in all of North India, which is a testament to their quality and scale. But here's where it gets really interesting for us as potential investors. The numbers speak for themselves. Between the financial years 2022 and 2024, the company's revenue grew by a staggering 243%. That's not just growth, that's explosive expansion, which is exactly what we look for when hunting for multi-baggers. This kind of growth doesn't happen by accident. It's fueled by a strategic vision. The company is aggressively expanding its manufacturing capacity. They are currently scaling up to 1,200 megawatts and have ambitious plans to reach 3,000 megawatts in the near future, with a long-term vision of hitting an incredible 5,000 megawatts. This expansion is a clear indicator that the management is confident about future demand, and that confidence is backed by a very strong and robust order book. An order book is like a window into a company's future earnings. Insolation Energy currently has orders worth over 301 crores. This provides strong revenue visibility for the coming quarters and shows that the market has immense faith in their products and their ability to deliver on large-scale projects. But they aren't stopping at just solar panels. The company is diversifying its product portfolio. They're venturing into new areas like solar batteries and inverters, which are crucial components of the entire solar ecosystem. This move towards becoming an integrated solar solutions provider is a massive step. It allows them to capture a larger share of the value chain and cross-sell products to their existing customer base. Let's talk about why this could be a multi-bagger for 2026. The Indian government is providing massive tailwinds to the solar industry through policies like the PM Surya Ghar Yojana. This scheme aims to install rooftop solar in 1 crore households. Imagine the demand that will generate for companies like Insolation Energy. They are perfectly positioned to capitalize on this once-in-a-generation opportunity. Furthermore, their focus on high-efficiency panels, like their TOPCon and bifacial modules, gives them a technological edge. In a competitive market, innovation is key. By offering products that generate more power from the same amount of space, they are creating a strong value proposition for their customers, whether it's a large industrial plant or a residential rooftop. The company's financials are also trending in the right direction. Their profit after tax has seen a significant jump, reflecting improved operational efficiency and economies of scale as they expand. When you combine this with their aggressive capacity expansion and a government-backed sectoral boom, the potential for significant value unlocking becomes very, very clear. Of course, there are risks. The solar industry is competitive, and there's always the risk of changes in government policy or fluctuations in the price of raw materials. However, the sheer scale of the opportunity in India's renewable energy sector is immense. A company that is executing this well, growing this fast, and has a clear roadmap for the future is hard to ignore. So, when we look towards 2026, Insolation Energy represents a pure play bet on India's solar dream. With its expanding capacity, strong order book, product diversification, and the powerful tailwind of government support, it has all the ingredients to potentially deliver multi-bagger returns for investors who are willing to take a long-term view. Friends, if there's one word that will define the next decade, it's AI, artificial intelligence. And our second company, NetWeb Technologies, is at the absolute epicenter of this technological tsunami in India. This isn't just another IT services company. NetWeb is something special. They are India's only listed manufacturer of high-performance computing, or HPC, solutions. These are the supercomputers, the powerful servers that form the backbone of any AI infrastructure. Think about it. Every time you hear about AI models, machine learning, or data analytics, all of that requires immense computational power. NetWeb builds the hardware that makes it all possible. They are a key player in building the picks and shovels for India's AI gold rush, and that is an incredibly powerful position to be in. They've been in this business for decades, building a deep moat of expertise. What's truly exciting is the shift in their revenue mix. A few years ago, their business was more balanced. But now, a significant and growing portion of their revenue is coming directly from their high-end AI systems. This tells us they are successfully riding the AI wave. Their revenue from AI systems has seen a massive jump, indicating strong market adoption and their leadership position in this niche, high-margin segment. Their client list reads like a who's who of India's top institutions. They supply their HPC solutions to the premier IITs, to research labs, and to major corporations. This isn't a business where you can just show up and compete. It requires deep technical knowledge, trust, and a proven track record, all of which NetWeb has cultivated over the years. This creates a very high entry barrier for potential competitors. Let's talk about the order pipeline, which is a crucial metric for a company like this. NetWeb has a huge order pipeline running into hundreds of crores. This includes major contracts for building AI infrastructure for both public and private sector clients. This strong pipeline provides excellent visibility into their future growth and solidifies their status as a go-to provider for complex computing needs. Innovation is at the core of their DNA. They recently launched their own Tyrone range of servers and workstations, which are designed and made in India. This is a huge step in line with the Make in India initiative. They are not just assembling, they are designing and manufacturing high-tech products domestically, which is a massive strategic advantage. They also have key partnerships with global tech giants like NVIDIA, the world's leading chip maker for AI. This partnership with NVIDIA is a game changer. It gives them access to the latest and most powerful GPU technology, which is the heart of any AI server. Being a preferred partner means they get early access to new tech and can build cutting-edge solutions for their clients, keeping them ahead of the curve. This is a powerful validation of their technical capabilities. Looking towards 2026, the demand for AI infrastructure in India is set to explode. The government's India AI mission, with an outlay of over 10,000 crore rupees, is designed to build a robust AI ecosystem in the country. This includes setting up massive public and private AI computing centers. Who do you think will be a key beneficiary of this spending? Companies like NetWeb Technologies. They are also not limiting themselves to India. The company has clear international expansion plans. They are looking to take their Made in India high-performance computing solutions to the global market. Given the quality and cost-effectiveness of their products, this opens up a whole new, much larger addressable market for them, which could supercharge their growth in the coming years. So, to summarize, NetWeb Technologies is a unique bet. It's India's only listed pure play on the AI and supercomputing hardware boom. With a strong shift towards high-margin AI systems, a massive order pipeline, prestigious clients, key international partnerships, and huge government tailwinds, NetWeb is perfectly positioned to be the backbone of India's digital future. This deep tech story is what makes it a compelling candidate for a 2026 multibagger. Our third pick is a fascinating company that operates in some of the most critical sectors of the economy. I'm talking about Marine Electricals India Limited. As the name suggests, their core business has been in the marine sector, providing integrated technical services in electrical automation and power systems for ships and naval vessels. This is a highly specialized field with very few players, and they are a dominant force. The company has been delivering exceptional financial performance. Their revenue and profit growth over the last few years have been incredibly strong and consistent. This isn't a story of one-off success. It's a story of sustained execution. They have built a reputation for quality and reliability in a sector where there is absolutely no room for error, especially when dealing with defense contracts for the Indian Navy. But what makes Marine Electricals so exciting for the future is its brilliant diversification strategy. They haven't just stayed in the marine sector. They have leveraged their expertise in electrical systems to expand into other high-growth verticals. This diversification de-risks their business model and opens up new avenues for exponential growth. It shows a forward-thinking and agile management team. One of their most promising new verticals is the electric vehicle charging infrastructure. They are manufacturing and setting up EV chargers. With India's EV revolution just getting started, the demand for a robust charging network is going to be astronomical. Marine Electricals is positioning itself as a key player in building this critical infrastructure, a sector that is poised for a multi-decade growth story. Another key area is their industrial vertical, where they provide electrical solutions for large data centers, buildings, and industrial plants. Again, this is a direct play on India's economic growth. As more factories are built, as the digital economy expands, the need for sophisticated electrical and power management solutions, which is their core competency, will only increase. Their order book is a testament to the success of this diversified strategy. It's large and healthy, currently standing at over 500 crores. What's important is that this order book is well diversified across their different business segments: marine, industrial, and others. This provides a stable and predictable revenue stream and reduces dependence on any single sector. Let's discuss the strengths. They have long-standing relationships with key clients, including the Indian Navy and major shipyards like Mazagon Dock and Cochin Shipyard. These are sticky clients, and the contracts are often long-term. Their expansion into EV charging and data centers are perfectly timed to ride major secular growth waves. The management has a proven track record of profitable growth. However, it's also important to be aware of the risks. The marine business can be cyclical, and delays in shipbuilding projects can impact their revenue. The EV charging space is becoming competitive, with many new players entering the market. Execution will be key. Investors need to monitor their ability to maintain margins while scaling up these new businesses. Despite these risks, the potential is undeniable. The company is transforming from a niche marine player into a diversified electrical engineering powerhouse. They are effectively a proxy play on three massive themes: India's naval modernization, the data center boom, and the EV revolution. This multi-pronged growth strategy is what sets them apart. Looking at 2026, if Marine Electricals can continue to execute on its expansion plans, particularly in the EV and industrial sectors, while maintaining its leadership in the marine space, the market could significantly re-rate this stock. It's a story of leveraging core competencies to tap into new high-growth markets, and that is a classic recipe for a potential multi-bagger. Friends, let's now talk about a sector that is critical for national security and is undergoing a massive transformation: defense. And in this space, our fourth company, Data Patterns India, stands out as a true gem. This isn't just an assembler of parts. They are a vertically integrated defense and aerospace electronics provider. They design, develop, and manufacture the entire spectrum of high-tech electronics, from components to full systems. What does vertically integrated mean? It means they have control over the entire process. They make their own processors, their own circuit boards, their own software, and then integrate it all into complex systems used in missiles, radars, electronic warfare systems, and satellites. This gives them a massive competitive advantage in terms of cost, quality control, and customization capabilities. Their financial performance is simply stellar. The company has demonstrated incredibly strong and consistent profit growth over the past several years. This isn't just top-line growth, it's profitable growth, which shows their operational excellence and pricing power. They are also nearly debt-free, which is a huge sign of a fundamentally strong company with a robust balance sheet. Their client list is the most prestigious in the country. They work with the Defense Research and Development Organization, the Indian Space Research Organization, Hindustan Aeronautics Limited, and Bharat Electronics Limited. These are not just clients, they are deep, long-term partners. The trust and relationships built over decades are invaluable and cannot be easily replicated. Let's talk about their order book, which is a key indicator of future performance. Data Patterns has a healthy and growing order book, giving them strong revenue visibility for the next couple of years. A significant portion of these orders is for development-cum-production contracts, which means after the initial development, they are likely to get large, recurring production orders for many years to come. One of the most exciting aspects is their growing focus on exports. Historically, their business was largely domestic, but now they are actively looking to export their cutting-edge electronic systems to friendly foreign countries. The Make in India for the World theme is very real for Data Patterns, and success in the export market could open up a revenue stream that is many times larger than the domestic opportunity. The company also has a policy of rewarding its shareholders. They have a healthy dividend payout ratio, which is quite rare for a high-growth company. This shows that the management is confident in its future cash flows and is committed to sharing its success with the investors. It's a sign of a mature and well-managed organization. Now, let's address some of the potential concerns, because no analysis is complete without looking at both sides. One point to note is the high level of debtors, or money owed by clients. This is common in the defense industry due to long payment cycles, but it's something to keep an eye on. Another point is the promoter holding, which has seen some reduction, although at a comfortable level. However, the tailwinds for Data Patterns are immense. The government's push for Atmanirbharta, or self-reliance in defense, is creating a massive, protected market for domestic players. The government is actively discouraging imports of defense electronics that can be made in India. Data Patterns is the biggest beneficiary of this policy shift. So, when we look towards 2026 and beyond, Data Patterns represents a high-tech, high-margin play on India's defense modernization and space exploration journey. With its vertical integration, marquee client base, strong financials, and the huge policy tailwind of Atmanirbharta, it has a clear and long runway for growth. It is a prime candidate to be a significant wealth creator. Our fifth and final company for today, friends, is a powerhouse in the world of high-precision manufacturing. I'm talking about Azad Engineering. This company manufactures highly complex and mission-critical components, primarily for the aerospace and energy sectors. They make the parts that go into the core of jet engines and power turbines, components where there is zero tolerance for error. What immediately jumps out about Azad Engineering is its global focus. A staggering 92% of their revenue comes from exports. This is not just an Indian company, it is a global supplier trusted by some of the biggest names in the world. They supply to giants like General Electric, Mitsubishi, Siemens Energy, and Boeing. This global validation speaks volumes about their quality and technical prowess. Their order book is a thing of beauty. It's not just large, it's long-term. The company has long-term contracts with its major clients, often spanning 5 to 10 years. This provides incredible revenue visibility and stability, which is a dream for any investor. It shows the deep integration of Azad within the global supply chains of these aerospace and energy giants. The financial performance has been robust. The company has shown strong profit growth, driven by an increasing share of high-margin complex components. As they move up the value chain and manufacture more critical parts, their profitability is set to improve even further. This is a business with significant operating leverage. To fuel its future growth, Azad Engineering has undertaken major capital expenditure plans. They are setting up new manufacturing facilities and investing in the latest technology and machinery. This capex is not just for show. It's backed by confirmed orders and the demand they are seeing from their global clients. They are building capacity for the growth that is already knocking on their door. The entry barriers in this industry are extremely high. You can't just decide to start making turbine blades for a GE engine. It requires years of research and development, stringent quality certifications from global OEMs, and a proven track record of flawless delivery. Azad has spent years building this moat, which protects it from competition and allows it to command premium pricing. Let's talk about the growth drivers. The global aerospace industry is in a strong upcycle, with massive backlogs for new aircraft. This means a sustained demand for new engines and therefore the components that Azad makes. In the energy sector, the shift towards cleaner energy sources like natural gas and nuclear power also requires advanced turbines, which is another growth area for them. Now, let's look at the current financial metrics. As a high-growth company investing heavily in its future, its current valuation might appear stretched to some. The price-to-earnings ratio is on the higher side, reflecting the market's high expectations for future growth. This is a stock for investors who believe in the long-term story and are willing to look past short-term valuation metrics. The company is also diversifying its customer base and product portfolio. They are looking to add more global clients and are also entering new segments like defense and oil and gas. This will further de-risk their business and open up new avenues for growth. This strategic foresight is a hallmark of a quality management team. In essence, Azad Engineering is a play on world-class, made-in-India precision engineering. When we look towards 2026, we see a company that is deeply entrenched in the global supply chain for two massive industries, aerospace and energy. With its long-term contracts, strong client relationships, high entry barriers, and aggressive expansion plans, Azad has a clear path to potentially multiply its earnings and in turn deliver multi-bagger returns for its investors. So there you have it, friends. 5 companies, each with a unique and compelling story. From insulation energy powering our green future and NetWeb building the brains for AI, to marine electricals electrifying our seas and streets, data patterns securing our nation, and Azad Engineering showcasing India's manufacturing prowess to the world. These are businesses with strong fundamentals, visionary management, and massive growth runways ahead of them. They represent some of the most exciting themes that will drive the Indian economy forward. However, and I cannot stress this enough, the journey of investing is a personal one. The purpose of this video was to bring these exciting stories to your attention, to spark your curiosity. It is absolutely crucial that you treat this as a starting point. Please, dive deeper. Read their annual reports, study their financials, understand the risks involved, and always do your own research before making any investment decision. Your hard-earned money deserves that respect and diligence. I'm incredibly curious to hear your thoughts. Which of these 5 stocks excites you the most? Do you have any other potential multi-bagger picks for 2026 that you're tracking? Let's build a community of informed investors right here. Drop your thoughts, your analysis, and your questions in the comments below. I'll do my best to read and respond to as many as I can. Don't forget to like, share, and subscribe for more insights on the Indian stock market.